Whole life insurance is a wildly misunderstood financial tool. In the personal finance space, it's actually a very polarizing topic. You either love whole life insurance or you hate it. Now, most adversaries of whole life would tell you that whole life is simply too expensive, so you should just buy term and invest the difference. However, whole life insurance is about way more than just a death benefit. It comes with a list of other benefits that are going to help you throughout your living years and not just pay you a death benefit, but help you while you're alive. By the end of this video, I'm going to show you that not only do you want whole life insurance, you're actually going to need it while you're alive. So I've come up with a list of 10 reasons that you're going to need whole life insurance. So if you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video. If you find value in this, please like it, share it, subscribe, get all these things out there. Let's go. Hey, what's going on, Cashflow hackers? It's Chris with Life 180, and today we are talking about the 10 reasons you want whole life insurance, or that you need whole life insurance. Ultimately, I'm going to go through 10 reasons I think whole life insurance rocks, and that ultimately most people are not aware that these are benefits that whole life brings to the table in different ways, way beyond just the death benefit. And ultimately, when we talk about some of the death benefits, probably some elements of it that you hadn't contemplated or considered before. So let's go. Reason number one, lifelong coverage. Whole life insurance provides coverage for your entire life as long as you pay the premiums. This ensures that your loved ones are going to receive a death benefit regardless of when you pass away. Remember, we don't know when we're going to die, but we do know we are going to die. And a lot of times people say, maybe I'm going to die later in life. Maybe I don't need insurance. Well, one of the things about knowing that you have this protection is it gives you permission to spend your money that you accumulate for retirement and other goals and desires. When you have your life insurance policy there for you, it basically insulates you, and it's kind of a backstop to your personal finances. So even if you get to a place where you're able to self-insure, it's actual just financial efficiency to always have whole life insurance there on the back end. It's just the financially savvy thing to do. So reason number two is cash value accumulation. I don't know if you know this or not, but whole life insurance policies build cash value over time. The cash value grows on a tax-deferred basis and can actually be accessed during your lifetime through policy loans or withdrawals tax-free, providing you with potential sources of funds for emergency, for opportunity, for education, and for retirement. It's pretty awesome. So reason number three is a guaranteed death benefit. Whole life insurance guarantees a death benefit to your beneficiaries, which can help replace lost income. It can cover funeral expenses, and it's going to provide financial stability for your loved ones if something tragic happens to you. It's this guaranteed death benefit that I call self-completing plan. And number two, we talked about cash value accumulation. Well, when we talk about saving money and saving it inside of a policy and then having this guaranteed death benefit, it makes sure that what you want to happen will happen when you want it to happen. If anything tragic happens to you, it completes your savings plan up to what you were trying to accomplish. Make sure your kids are able to go to college. Make sure your spouse is able to live a life of stability. Remember, you cannot get rich through life insurance. A lot of people think that, I don't want to overinsure. I got news for you. The life insurance company is not going to let you overinsure. There's too much risk to them. Everybody has what's called a human life value, and the life insurance company is not going to let you overinsure your human life value. And so when you look at it from that perspective, I would say try to figure out what the insurance company can give you and then get as much as you possibly can afford when you're saving money at the same time. And if you do, not only is it going to help make sure your loved ones are taken care of, if something tragic happens to you, it's going to help you accomplish your goals through the accumulation of cash value and some of the other things I'm about to touch on as we go along here. So let's go. Reason number four is fixed premiums. Whole life insurance offers level premiums that remain the same throughout the life of the policy, which is basically your life. This provides predictability and allows for effective long-term financial planning, as you can budget for the same premium amount without worrying about it increasing. One of the things that I always tell people is that when we have certainty about our future and we know what we need to measure, then we can plan accordingly, and it increases the production and the predictability and the efficiency of everything else that we have going on in our personal life. And so when it comes to having these level premiums, and you can pick a date if you want to pay through the age 65, 75, 99, whatever it is, there's all sorts of different products and options and designs with whole life insurance that you can do. and implement to fit your needs and goals and objectives. But at the end of the day, the fact that you know that this is there and you can use it in all these different ways that I'm touching on is extremely important. Reason number 5 is dividend potential. Now, whole life insurance policies issued by participating mutually held insurance companies may be eligible and are likely eligible for dividends. Now, dividends are a share of the company's profits. When you are participating and have a policy with a participating mutual company, you basically share in the profits the same way a shareholder participates in the profits of a publicly traded company. You can use these dividends to increase your death benefit, to increase your cash value. Ultimately, you can even receive them as cash if you want to for income. And while the dividends may not be guaranteed, every company that I would suggest that you go with or potentially get a policy with has paid a dividend for 120 plus consecutive years. Even in all the greatest financial catastrophes that we've had in this country, whole life companies have never missed paying a positive dividend. Reason number 6 is the tax advantages. Now, the cash value growth in a whole life policy grows tax deferred, meaning that you're not going to owe the taxes on the growth until you withdraw the funds. But additionally, you're also going to be able to pass the money that they receive through the death benefit tax-free as well. Now, tax benefits come even better because you are able to access up to your cost basis completely tax-free and then access the rest of your money in whole life insurance policies through policy loans, which is another strategic way that a lot of the most successful people in the world understand and leverage to be able to strategize and integrate into their tax planning strategy to lower their lifetime taxes and ultimately have more liquidity with their cash. Reason number 7 is estate planning. Whole life insurance can play a valuable role in estate planning. In fact, I would say you can't really have an efficient estate plan without whole life insurance involved. It can provide liquidity to cover estate taxes, ensure equitable distribution of assets among heirs, and facilitate a smooth transition for your wealth so there's no fights among family members should something tragic happen to you. When you include whole life insurance into an estate plan with a trust, it allows you to manage your money in a way that most people can't imagine after you pass. Reason number 8 is legacy planning. I don't know if you know this, but whole life insurance can be used as a tool for leaving a lasting legacy, even to somebody outside of your family. You can name a charity or organization as a beneficiary, ensuring that your philanthropic goals are fulfilled. Even if you don't need life insurance to take care of a family member, you're probably going to want life insurance for some of the living benefits that are going to come with it. And knowing that you can use the death benefit portion of this to help your philanthropic goals is a really, really amazing added bonus. So reason number 9 is protection against market volatility. Now, unlike other investment vehicles tied to market performance, whole life insurance offers stability and guaranteed growth like no other asset in the world. The cash value grows at a fixed rate, providing a conservative and reliable source of asset accumulation. It's one of the reasons we call this a volatility buffer, because when you integrate whole life insurance into your financial plan as part of a bigger holistic plan, whole life actually will make the performance of your other assets better over the long run because you have a guaranteed asset that you can lean on in times of poor market performance, allowing other assets to recover and not having to liquidate negatively performing assets in those down markets. And finally, the 10th reason is the living benefits. Now, in addition to accessing the cash value for reasons that I stated earlier, you have the ability to accelerate the death benefit while you're alive to handle your medical needs. If you're diagnosed with a chronic or terminal illness, in many cases, you're going to qualify to access the death benefit while you're alive to cover expenses like long-term care and alternative treatments that your insurance simply wouldn't cover without this. As amazing as whole life insurance is, and I'm sure some of those reasons just connected with you, remember that not all whole life designs are created equally. The agent that you choose to work with is just as important as the company that you get the policy with. Make sure that you work with an agent that takes the time to get to know you, your goals, your objectives, your values, and your beliefs. Only then are they going to be able to design a policy that's optimized for you. I hope you have a blessed, inspirational day. I hope you found value in this video. If you did, please like it, share it, get it out there to people. Till next video, we'll talk then. See ya.